So let's break that down a little bit because that was a lot of information that even though some people might be following, maybe not everyone is who's watching the video. So when you talked and described about the carve out, can you kind of just explain that a little bit in greater detail? Is the carve out a piece of the property itself? Is that a percentage of the property's equity? Like, can you kind of break that down a little bit so people would know what that term means?
Of course. And I did forget about the bonus tax benefit as well. So thanks for the opportunity for me to clarify. So that is actually a syndicated deal is an SEC offering. So we have to go through all of let's just say there's a lot of buzz on like IPOs, et cetera. That's an SEC offering that you get. So, and you get it as a stock. Think of it as a stock. Mm-hmm. So you receive equity that comprises the ownership of the property. Just like in a regular stock, if any of you own Apple or Amazon, et cetera, that one share of Amazon, for instance, represents a tiny fraction of ownership of the larger Amazon, portfolio. So it's the exact same logic, except on a per property basis. So let's just use the example, Annabelle's example. She had a 34 unit property. Maybe that was, I'll just make this up. It was 10 million. So 10 million is the value in which she acquired that. And then basically she puts that into a syndicated deal, and she sells shares of that ownership. And then I hope that clarifies things. So you just buy a share, but at the end, it's tied to that property. It's a physical asset that the shares are tied to, as opposed to a physical company.
So the way that the investor is looking at your deals then, Michelle, is they're looking at this as earning money from two different parts of the same pie, which is they know they're going to every quarter get some kind of payment from you. And that's what you were describing as preferred. And then there is another component to that, which is taking us all the way back to the beginning of your investment style, which is you were talking about doing value-add investing, fixing up the apartments, probably improving the apartments, probably increasing the value quite a bit. Mm-hmm. And maybe there's a target that you go for, 30, 40, 50%, whatever. But there's probably some target that you go for so that that value will be that much greater when you go to have the project or the building refinanced. And that carve out that you were describing, instead of them actually owning like a piece of the deed, they're owning a piece of that deed through a share. It's like owning like a common stock. It's like a registered security. Is that a fair way to kind of describe what you do?
Yes. Just for clarification, though, I don't necessarily offer preferred returns on all my on all my deals.
Sure.
So the distribution on a quarterly basis refers to the cash on cash. So the cash flow. Sure. So you have the cash flow and then the appreciation. And yes, you're correct. I'm very much, because I'm value oriented. I'm mission driven. That's what FIRE is about. And I believe in the 3 Ps, the purpose, the people, and the profits. And you focus on building, adding value to the property and creating greater stickiness and loyalty with the people, the profits will follow.
So, yeah, and that makes perfect sense, because if you're improving a property, and maybe it's going to take you a year, and I'm just kind of throwing that number out. It might be more, might be less, but maybe it's going to be a year. It would be difficult for you to generate an income stream that you could pay to the investor if maybe quite a few of those apartments, if not all of those apartments, are vacant at some point and you're trying to remodel them. You're obviously not going to generate income from them at that time. So it makes perfect sense that on a property where it might be what I call a heavy lift, where you're going to have a lot of non-income producing apartments while you're doing remodeling to pay your investors. However, those investors understood before they got invested with you in that project. They probably had an idea that you had a 5 or a 7 year time frame, and you probably spelled that out in some kind of material to the investors so that they knew full well this is what the expectation is for this project, and maybe even a business plan that might be wrapped up in it or something like that.
Yes, all offerings include a business plan, both in presentation form as well as the, all of the verbiage, the legal. I leave the legal wording to the attorneys. That's above my pay grade. That's where I
Yeah.
make the money.
Everyone on this call, anyway.
But yeah, I mean, it's spelled out in both our plan from, X% that we plan to remodel, what we've done in terms of market comps, and what we determine is what we can add value on a monthly basis, on a yearly basis with these remodels. We get into the detail in terms of the cost of those remodels, down to mini blinds and other things. So it can it sounds very technical, sometimes a little bit boring, but you absolutely need to do that if you're going to bake it into your underwriting, what your capital improvements forecasts will be, creating extra contingencies for those emergencies. Like, for instance, no one it would have predicted the pandemic to hit and what the ramifications were. No one, except maybe the insurance providers, could have predicted the impact to our pocketbooks on the rising insurance premiums. These are all things, the supply chain hiccups that we experienced even to this day, it's smoothing out, but in terms of appliances and construction materials and things of that nature that had driven up inflation and driven up prices. So you always need to bake into your underwriting those contingencies and those, I can't swear, so let's just say the buffer.
Yeah.
The
Well, and
buffer.
that makes sense. That makes sense because in the value add business, right? I mean, you're trying to provide an apartment at the end of the day that, people will come to know and respect the finishes that you provide. And when you're describing blinds, that's a part of the package, no different than, say, a kitchen faucet that you can pull out and use as a hose, right? I mean, these are such small little details, but they might be really important things that people use in their lifestyle, that they'll say, wow, this owner really thought of all of the things of how to use this apartment to the
Yeah.
max, so to speak. So
Yeah.
that's what value add people do. So that makes sense that you would be thinking on that level of detail.
Yeah. And it's also bringing good people, surrounding yourself with good people. I can't, ethical, kind is underrated, really. Hard work is underrated. And those are people that really bring a lot of value to the team. I have a great asset management team, and we always kind of brainstorm on what community events we can create for certain properties, and it really depends on the market. So in one place in Texas, we had we had an ice cream social or a movie social that worked really well. Another place, we had a back to school supply event. So we noticed there were a lot of like school age kids. So we bought some backpacks and school supplies, etc. And we made that announcement along with some hot dogs, and it was great. We have pizza and payment socials, just to name a few.
And I think what I learned, just to add to that, is that when we took over and we saw the condition the property was in, and the condition that these people were living in, we thought, that's not the way we wanted to run our property. And as they saw us coming in and remodeling and doing all these great things, that alone for them was like, that was, that they were so grateful
Yeah.
that
Yeah.
someone cared, right? Because the previous owner didn't. And so just that alone was, they were so grateful, they were so thankful, they were so nice. And 34 doors is not a lot. It's not a lot of doors. We didn't even have to do marketing. Once the tenants are happy, they have friends and they have,
Exactly.
just fill. I mean, we had a wait list, and it was just so nice because we knew we were doing the right thing for the property. And if you, like you said, like if you do the right things, everything else will follow, and it really does. So I agree. I agree with what you're saying there. I have another question for you. Right now that the market has shifted and everyone feels it. Are you active in purchasing, or are you kind of holding back, kind of waiting to see what's your, where are you at?
No, I've said this to, I coach as well. So, because I believe in giving back, I started from nothing. I started actually with less than nothing. My divorce put me, let's just say, over $1 million in the hole. And, I had to hustle. So basically, when people zig, you zag. And this is a really incredible time. There's a wise old man from Omaha, the Oracle from Omaha, that basically says this is the best time, this is the prime time to start looking. And it's true. I mean, there is still 11-point percent discrepancy between sellers' expectations and buyers' expectations. And obviously that varies depending on local market conditions, but that's the average for multifamily. So there's still that mismatch, but it's starting to come down. There's definitely some price adjustments. And then you also see several hundreds of billions of dollars, and I say billions of dollars that are maturing, of loans that are maturing now. 162 billion exactly for 2023, and even more in 2024. These are assets, these are properties that are ripe for opportunity. And in which people were buying a lot of fluff post-COVID in 2021, 2022. They bought on bridge, and there's a banker knocking on the door, because they're up, because their variable rates have now, they've varied. So I like boring. I am active. In fact, I'm going under contract for another property in Texas very soon, and that's a great opportunity. You have to be very conservative with your numbers and make sure that we try to under promise and overperform.
That's cool. Anyone have any questions? This is a good time for any questions. Everyone good? Hey, the more questions you ask, the more money you make.